Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. What do we got going on in the stock market? Well, stock market's kind of holding up pretty well, right? I mean, we're at a record high and it's kind of holding there. Been there for a couple of months. It's not really going anywhere. It's the same place it was 2 months ago, right? But it's at a record high. In nominal terms, they're holding the stock market up really well. Now, compared to gold, which is real money, the stock market is going down. It's been going down for the last 25 years compared to real money. Now, my question is the stock market really at a record high, or have they just printed so much money that they're propping it up? And they're going to continue to prop up the stock market. That's my belief. They're going to continue to print money, and I do think the market is going to push up a little bit higher from here, probably 6,400, maybe even 6,500 on the S&P. That's what the charts show, right? The charts show this channel that's going to go up and hit about 6,400. But I do think we're going to have this massive pullback. We're going to usher in what's called the bear market. Now, a lot of people don't know what the bear market is because you're too young. You've only been trading for 16 years or less. You've only seen an up market. You haven't seen that down market yet. Now, my belief is that you'll be much better off in the gold market. Gold has outperformed the stock market for the last 25 years, and it will continue to outperform until gold becomes 1-to-1 with the Dow Jones. And at that point, I'll be selling all of my gold to buy into the stock market again. Dow's at 45,000, gold's about 3,000. They're going to equal out about 1-to-1. This is just my take. All right, let's get over to the real estate market now. Real estate market's fascinating to me. Now, in 2008, the crash started in the United States with the subprime mess, right? We were giving loans to anybody. If you were breathing, you could get a loan. You shouldn't have been buying a house. But anyways, it crashed and burned, and we were the epicenter for the world, right? The whole world went into a great financial crisis. Well, now we know where the epicenter of this current housing crash is going to be, right? It's starting out in China. China is where the crash is already happening, right? Okay, so China had a real estate market that was valued at $60 trillion. The largest market in the world, right, was the Chinese real estate market. Now, it's already has lost 35%. So that 60 trillion has already crashed down to 40 trillion. China has already lost $20 in market cap in their real estate market. So we're starting the crash in China this time. Now, this is going to be worldwide. It's a worldwide bubble, but the crash has already started in China, losing a third of its value, right? Okay, now the United States, we're just starting the crash, right? The home builders is where the crash is starting. Home builders are cutting prices, 30,000, 40,000, 50,000, 60,000, 100,000 in some cases. They're just slashing the prices. And you can see this in the stock market, right? The stock market is slashing the value of the home builders down 20, 30, 40%, depending on which home builder you look at. But you see, the home builders is where the crash started in the United States back in 2008. They were slashing prices like they're slashing prices today. Now, I'm not saying you can't go out and buy a house. You can. It's the most affordable time that there's ever been to go out and buy a house. But I'm not stopping you from doing that. Actually, I'm begging you to do that. I'm a real estate broker. Please go out and buy a house and help us real estate brokers, right? We need a little more business. But the thing is, if you go out and buy a house right now, you're really committing financial suicide. Now, houses have been pretty steady, right? I mean, you look back to the year 2022 where they peaked out in 2022 at $438,000. And since 2022, we've kind of slanted downwards, right? Down to 418,000 today. So 438 down to 418,000. That doesn't even feel like anything because that's just 20 grand, right? Okay. But there's this silent crash going on. If you bought back in 22 at 438 and you've been coming down, well, inflation's been running at 10%. So over the last 3 years, you've lost lost 30% of your purchasing power on top of the $20,000 you lost for buying the house. So it feels very painful, right? And if you look at it in terms of real money, in terms of gold, it gets really painful because you've already lost over 40% of your purchasing power. You've lost your purchasing power. You sold in 2022 like Billy Bob, got out at the top, put his money into gold. He's 50% ahead of you, right? You're just riding out the downward crash. Now, the downward crash, will it happen in nominal terms? My take is that it will. Now, if you buy a house now, you can. Very unaffordable right now. People can't afford it, right? Why? Because it takes about 50% of your income to go and buy the average price home, right? So you're taking half of every dollar that comes in to pay off your mortgage, to pay off your insurance, to pay off your property taxes. And you could do the same thing by renting and save anywhere from 30 to 50% depending on the area. In my area, you save about 50%. Now, here's the thing. Here's what's going on in my area. Okay, I live in the Bay Area, right by Apple Computer. Now, inventory year over year is up 50%. 50% inventory has climbed 50% since this time last year. Okay, the days on market. Days on market, very fascinating. Last year was taking about 16 days to sell a house, right? I'd put a house on, multiple offers come in, and we'd sell it within the week, right? But the average was 16 days. All right, that is up to 40 days now, right? 140% increase in the days on market. And the number of sales dropped by about 30% year over year. This is just my area, and real estate is it's very geographical, right? Different areas operate differently. Florida is already crashing. Texas is already crashing. Other areas are just starting to crash, right? They're just starting to crash. But here's the interesting thing. Now, this is really fascinating. You got to pay a little bit of attention to this. Okay, FHA loans, which is what a lot of people use to buy loans. These are loans that are backed by the government. Their default rate is up over 11%. So that means 11% of the FHA homes that are out there are in default, right? Well, why don't you see this inventory coming onto the marketplace? Well, they cannot do it yet. They're in forbearance. They're in financial forgiveness. You see, what they do when they default, they make them a new loan, right? They say, hey, we understand that you cannot pay your mortgage. You don't have enough money. You can't survive when you're putting 50% of your income to your mortgage. So they say, we see this and we don't want to take the house back from you. We want to give you forbearance. We're going to give you a loan modification, if you will. Okay, so you had a 30-year loan. Let's make it a 40-year loan. And that way your payment will come down $100 a month. You go, okay, that sounds pretty good. Okay, I'll do that, right? And so you're out there, but you defaulted again. Now, this is a double default, and there's even triple defaults. They want to work with these people. They won't allow them to take the house out from under them. That's why there's a clog up in the inventory, being the financial markets. You see, now, if all this inventory, this 11% of delinquent people, think about that, 11% of homes coming onto the marketplace all at once. I mean, that would just crash the housing market. Now, it's funny. I get a kick out of this. Okay, so the data just came out that 11% of FHA loans are in default. And everybody, you read the comments on the article, they're all blaming Trump for this. It's already Trump's fault. Now, that's fascinating because the data is not even during the Trump administration. It still goes back to the Biden administration. But Trump's already becoming the fall guy for the housing market. His fault. His fault that your 11% delinquency rate. That just cracks me up, right? But the reason we're at 11% delinquency rate is we're allowing people to buy houses that they cannot afford, right? And we did this is why the subprime crash back in 2008, people were buying houses that they had no right to buy. They couldn't afford the house. And we're right back at that scenario right now. 50% of income goes to buy the house. That's not sustainable. You can't keep people in the houses, right? So the government has all these FHA loans that are backed. Now, it's interesting. The government has already bought $3 trillion worth of loans, right? Mortgage-backed securities owned by the Federal Reserve. $3 trillion, right? And they're responsible for everyone that has a mortgage. 85% of mortgages are actually backed by the U.S. government with Freddie and Fannie Mae. Freddie Mac, Fannie Mae backed the mortgages, right? So if the government would just get out of the mortgage business and let the mortgages go to the free market. Now, I keep talking about that. Oh, that would push mortgages well above 10% if we let the free market forces just work out. And the government can't do that because they'd have well over a 50% price crash of the housing market, right? And they can't have that happen because that's where they get their income from. Where they get their income from? They get it from the property taxes. So they kind of want the houses to stay up at these levels, and they would even prefer that they go up higher so that they can charge you more property tax, right? Government loves to charge you more money. They want to get their profit. They want to make money. They're your partner in the house. You buy the house, you make all the payments on, and they're taking their percentage in the form of property taxes. And those keep going up. Insurance is another partner you got, right? These insurance companies keep doubling and tripling the insurance rates, but people can't afford to their house right now. They can't afford it. But if the government would ever get out of the mortgage business, we'd see where the free market goes, right? And the free market would be about half off from where we are, maybe as much as 80% off. It's really kind of scary. But real estate now is kind of in this death spiral. You can go out and buy right now. Please do. Please do. Nobody's buying you. You should be the one that goes out and buys. You'll be the bag holder. China, they're already realizing it now. China down 35% already. And what this is doing is it's actually helping the gold market. You see, China no longer wants to be in the real estate market. So the ones that sell their houses are going into the gold market, like Billy Bob. Now, Billy Bob was way ahead of his time. You know, he sold back there in the 2022 up at the record high, put his money into gold. And that's what they're doing in China right now. If they can find a buyer for their house, they're getting out of the real estate market, getting into the gold market, and they're very smart for doing that because gold keeps going up higher and higher and higher almost daily, right? I mean, it's almost frightening how quickly it's going up. But here in the United States, we don't believe in gold yet. Less than 2% of people even own 1 ounce of gold. It's impossible for people to own it, right? Because they don't believe in it, and it's very expensive right now. But in China, they encourage them to do it. Now, does our government encourage you to buy gold? No! They encourage you to buy the debt, buy the bonds. They'll go buy the government bonds, right? Somebody's got buy these government bonds. Very scary. I'm going to talk about that in another video, but there's going to be $28 trillion of bonds coming due in the next 3 years. Who's going to be buying those? You going to get out there and buy some? They want you to. That's where they want you in. They don't want you in gold. See what happens when you're in gold? You're out of the system. They don't want you to be out of the system. You got to stay in the system, right? That's what they want to do. But this real estate, we're in this death spiral, right? And a lot of these companies, you can see it in their stock prices. Look at Lennar, look at Toll Brothers, look at Redfin. Redfin just laid off 10% of their workforce. Laid them off. Why? Because business is slow, right? They don't need that part of their workforce anymore. But you're going to see a lot of these real estate stocks are going to continue to grind lower. They're already at, I think they're at 52-week lows already. Why are they at these 52-week lows when the economy's doing so well, right? I mean, everything's moving out there. No, everything's not moving. The real estate market's frozen up. Takes 50% of your income just to get into a house. Do not go out and be the bag holder unless you want. Some people like being a bag holder. You can go out there and buy. A lot of people are buying. A lot of people think that this is the bottom. I've heard that. They're saying this is the bottom, but they're pricing it compared to gold. They're saying, hey, we've already dropped 40, 50% compared to gold. And that has. I mean, costs a lot fewer ounces to buy your house now than it did just 3 years ago in the terms of real money, in terms of gold, right? And eventually Billy Bob's going to sell his gold and he's going to get back into the housing market, but not yet, not yet. That's not what Billy Bob's saying. He's saying this has a lot farther to go. We'll see how it all plays out. If you like this stuff, give me the thumbs up, punch the subscribe button. Get out there, everybody. Have a great day, and we'll talk again real soon. Bye-bye now.